Hey, good morning, everybody. It's Hammer. Today is Tuesday, February 17th, 2026. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei, three amazing products to help you as an originator get more business in 2026. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time. Although on my end, it is actually 8 a.m. Eastern Time. Yes, this is pre-recorded. Now you know what that message in the text message meant. And what it really means is at 8 a.m., we're going to take a look, and I'll tell you when I send the text out at 9:30 to remind you to hop on if the market got better or worse or the same. And I'll put that in the text if I remember. But if I don't, well, hopefully I do. So anyway, so great to have you here. If you're here this morning, say good morning. Pretend I'm live, just like I do. Say good morning. It's great to see all of you. So many of you join me each and every day. Hope you had a great holiday weekend. I know many of you were working yesterday. I was still traveling back for my snowmobile trip, which I am doing now, actually. Look at this. It's beautiful outside. Let me see if I can't get you a little bit of a sunrise, a Minnesota sunrise here, as I am in MSP Airport. And I am traveling back to Atlanta and from Atlanta to Asheville, and I will be home this morning. So, anyway, good morning, y'all. Thank you again for joining me. Let's go ahead and get started. We're going to jump right in. Let's go ahead and take a look at the technicals. First things first, let me go ahead and share my screen, and we will get to the good stuff here. So, taking a look at the technicals. Right now, as mortgage-backed securities open after the holiday, we're just at about 8:05 a.m. Mortgage-backed securities are up 9 basis points on the morning. A great day, great thing to see. Where will they be around 10 a.m.? That is the big question, and that will affect where pricing is. Now, of course, if we were up like we are now, that would be good for pricing. Just how much would pricing, be different? Yesterday, if pricing came out, we were around 100.35. So this would actually be a little bit better and put us in a position to get slightly better pricing. And we'll take a look at rate sheets in a minute. Taking a look at the 10-year Treasury yield, 4.03. What a huge turnaround from when we broke that 4.20 mark, which was right about here back in January. And we spent almost all of February above that 4.20 until last week when we just had a huge drop in yields. Everything came down tremendously. And normally, when you see this kind of a drop in yields, we would expect to see an expectation of a Fed rate cut coming in March. And that is not happening. It has not changed. Bond yields are improving despite the fact that markets are not expecting the Fed to cut rates in March and not overly likely to cut rates in the April meeting either at the end of April. So it's funny because if we were to see expectations of Fed rate cuts, it would actually help bonds improve a little bit more. Taking a look at rate sheet pricing, you can see we have seen a really nice dip. The best we saw was 6.01 according to Mortgage News Daily. Again, not your rate sheets, but just a reference point. And look at this. We are back to 6.04. I did not think that we would be down this far. I'm going to go ahead and use this chart and we'll show what it looks like. I didn't think we would get back down. We're basically down to those same levels. Remember when we got this dip? Up, come on, get a little bit. There we go. Okay. So remember this dip, this drop here, that was caused by the Trump post, Truth Social post about getting the GSEs to buy mortgage-backed securities. And that, boom, came back up. And here we were. But look at this. And I mean, like, this is a big momentum shift right here. Big momentum shift. So I'm finally going to bite the bullet. I'm going to say that absolutely I would be floating everything. I said last week I didn't want to float loans closing in the next couple of weeks into the holiday weekend because I was afraid of waking up on Tuesday morning seeing mortgage-backed securities jump. We didn't see that, at least not so far. So hopefully things will be good. But anyway, my friends, by the time you're watching this, I am going to be up in the skies, which is why I'm pre-recording for you this morning inside of this wicked sound booth that they provide in the Delta Lounge. Look at this thing. This is, I mean, it is cool. I can talk full steam, not bother anybody. It's got a no reverb. So anyway, I will be coming to you from the office tomorrow. Make sure that you do join me then. I will throw the lock advice up on the screen. Right now, we are cautiously floating. Oh no, that's not what it is. Let's edit that. Cautiously floating. All right. There you go. So cautiously floating anything that's closing in the next 30 days, anything that we have longer term, nothing to worry about. There's nothing that points to rates moving higher for that. Oh, by the way, let's go ahead this week before I do wrap up. Let's take a look this week. Let me share my screen one more time. We'll take a look at what data we've got this week using Mortgage News Daily and their economic calendar. Let's take a look at their economic calendar this morning, and you will see this week we have basically not much today. We've got the weekly unemployment change numbers that we now get from ADP. Other than that, you've got a couple of Fed speakers, not much else going on. Tomorrow, we don't have anything in the morning that's really relevant. We will get durable goods. Durable goods don't generally have much of an effect on mortgage bonds, but unless there's a really, really big move one way or the other. And then we've got the FOMC meeting minutes later that afternoon, also not likely to make any big shakeups. On Thursday, we've got jobless claims in the morning, always one of the bigger things going on. And then on Friday, we've got PCE and core PCE and all the PCEs there, and we've got some other stuff going on here. So Friday's got the most opportunity to see rates, kind of go anywhere, and it's really possible that we could see rates even improve this week. So that's why we're floating. But anyway, hope you did like this. Make sure you do talk in the comments. Let me know what you think of Recorded Hammer. Doesn't always have to be AI, baby. Just record it and keep me posted. Let me know. Again, it helps with the algorithm. And also, I did this for you. Just do that for me. So, all right, my friends, thank you so much.